Nigeria's external reserves have risen by $7.09 billion since the start of the year, reaching $52.66 billion as of August 19, according to the latest CBN data. To unpack this, I'm joined by Oladipo Ajayi, Head, Fixed Income and Forex, Chapel Hill Denham. Thank you so much for joining us today, sir.
Good morning. Thank you very much for having me this morning.
Right. So first, how significant is this rise in external reserves to $52.66 billion, particularly given where we were at the beginning of the year?
Well, if you look at where we're coming from, you look at where we started at the beginning of the year, the expectation was that by the end of the year, we'll close around 50 to 51 billion dollars. And here we are now currently at around $52.66 billion. So it means that one way or the other, we have actually exceeded our expectation where we were seated at the beginning of the year. The expectation was that the reserve will close around 52, but where we are currently sitting now, we're already sitting very close to 53 billion, still counting. So which simply means that before the end of the year, there's every tendency that the reserve could actually eat as high as 54 billion. For me, that sounds very good for the country.
Right. So talk to us about, what's driving the reserve accumulation at this point. How much of it can we attribute to higher oil earnings, portfolio inflows, and improved forex liquidity?
Well, there are a lot of factors that actually are pressures that we're currently seeing in reserve. And I will start from the oil receipts. Currently, we are producing about 1.7 million barrels compared to where we used to be. I remember, I think around 2023, at a point in time, we are producing less than 900,000 barrels per day, despite the fact that our quota was about 1.8 million barrels. Above here now, we are currently producing about 1.7 million barrels per day. So it also means that that will lead to higher accretion to our reserve, and that's one of the key factors that's currently driving the reserve. And beyond that, also there are also foreign investments inflow into our markets. You and I know that the Nigerian yield return is actually elevated. We have a very booming capital markets, both on the equity side and also on the fixed income side. The equity side has actually gained close to about 54% yesterday as we speak. And when you look at the level of return that you can actually gain from investing in a fixed income market, the overall market can give you over 21% level of return. And when you compare that to a foreign investor that is sitting in an economy where the average return is about 4%. So it means that there's room for carry trade. So it means between taking money in US and investing in Nigerian markets, you can make close to about 1,700 basis points. And that will actually be very attractive to any investor that is shopping for alpha across the globe. And also aside that also is the diaspora remittance as well. That also has increased, and I think most of this is hinged on the current reform that the monetary policy guys are currently are pushing out, and we have been seeing reform in all form, and these are more like the fruit of most of this reform that they have been pushing out.
Right. Let's talk about the Naira. I mean, how would you rate it so far?
Well, Naira has been performing very well, and I'm sure you know very well that I'm an advocate that Naira will gain. And I've said this times without number, and it's premised on when you look at even the purchasing power parity, the real valuation stands around 1,100. So it simply means that even at 1,345, 1,350, Naira is still heavily underpriced. And currently, the sentiment has shifted a bit. Before now, we used to see a lot of speculative attack on the currency. But now, nobody dare try that, knowing fully well that Nigeria has the firepower to actually defend the currency as we speak currently. Now it's a market where you can actually go in and you have demands, your demand can easily be met. And on the parallel market side, the central bank has increased the allocation to the BDC, which also will cater for the guys and the invisible segment of the market. So I think everything lined up shows that there's heavy flows to meet some demand, and also what that will mean to the Naira, that will actually create a bit of stability for the currency for a short to medium term.
Well, let's go back to the reserves. Do you think we should be careful about celebrating the headline reserve figures? What's the quality of these reserves we're talking about, and how much of it is probably available for intervention and also to meet other needs?
Well, I think we can celebrate and we can also clap around that, because if you look at where we're coming from, I remember that day in July 2024. When it was announced that our net reserve is about 3.5 billion. We all know what will be the impact of that. And so we're not surprised when the Naira depreciated to around 1,900 before we saw the reversal back to the current level. So currently, our net reserve is north of 40 billion. So it means that even with that, you have close to about 8 to 9 months import cover. When you compare that to any economy in Africa, I doubt there's anyone that is close to that level of protection. So as we speak currently, the quality of reserve is strong. So it means that even when you remove all the encumbrances on the reserve, foreign portfolio investments into the country, and you need to repay some of those things and the like. So it means that the net that still belongs to the country is still about $40 billion. So that sounds good, and that sounds that Nigeria or the central bank has the firepower to provide for demands whenever any demand arises.
Well, if this accumulation continues, or just considering where we are at the moment, what should be the priority for policymakers, especially the CBN?
Well, if this continues, so it means that, and I like what the central bank has been doing. What they've been doing is that to ensure the stability of the currency. I remember at the time, sometimes in February, and when Naira was gaining aggressively, the currency was already going around 1,200 level, but the central bank stepping to regulate the market by coming in to become a buyer of dollar in the FM window. So what it means is that what they are trying to do is to ensure that the currency gain is something that is sustainable and not something that will wake up speculators. And that's exactly what I expect the central bank to continue to do. They continue to meet demands of investors, as I went to continue to meet demands of manufacturers that need to import to the market and import raw material, import raw machinery, and every other obligation that is due on the country. If we continue to do that, that will continue to reinforce that confidence that we expect on our Naira. And what that will mean to Naira is that we'll continue to see Naira great, and that will, one way or the other, that will help improve the valuation and standard of living of an average Nigerian.
All right, thank you so much, Oladipo Ajayi, Head Fixed Income and Forex, Chapel Hill Denham, for coming on the show and sharing your thoughts with us.